Good morning, everyone. Happy Friday, and welcome back to another edition of RoxomTV News. We have a lot to cover this morning. We've got two special guests joining us to talk about today's top stories. But first, let's get into things as off the coast of Venezuela, across the Caribbean Sea, and inside the halls of power in Washington, something very real is currently unfolding. You see, the United States has recently crossed a line it has avoided for years. It physically seized a tanker carrying Venezuelan oil in international waters. And according to multiple sources, that seizure was not a one-off. Washington is now preparing to intercept more tankers tied to Venezuela's so-called shadow fleet. Now, these are aging, lightly insured ships quietly moving sanctioned oil from Venezuela and sometimes Iran and Russia, mostly to China. Now, the first ship taken, called the Skipper, had already been sanctioned and is captured immediately froze nearly 6 million barrels of oil that were about to head to Asia. From the U.S. point of view, this is sanctions enforcement finally growing some teeth. Officials argue they are cutting off revenue that props up President Nicolas Maduro's government. Venezuela is calling the move piracy and accusing the United States of trying to overthrow its government and seize its oil. Now, legal experts counter that because the action was state-sanctioned, it does not meet the legal definition of piracy. What this really signals, though, is economic pressure enforced with helicopters instead of paperwork. Now, tankers are currently sitting offshore, voyages are being paused, and ship owners are reassessing whether sailing at all is even worth the risk. Longer term, fewer Venezuelan exports tighten global oil supply and raise volatility in already fragile energy markets. Now, for those of you watching at home, this matters because energy disruptions do not stay on a map. They show up in gas prices, shipping costs, and eventually the price of everyday goods. And if this tactic expands, it marks a shift where sanctions stop being symbolic and start being physically enforced. And in other news, Bulgaria's Prime Minister, Roxom Zelaznikov, has stepped down after weeks of growing protests over corruption and governance failures. Let's take a look.
We protest against this fundamental budget because it threatens to seriously harm a large portion of working Bulgarians, the middle class. This is unacceptable. The government continues to funnel resources into the power structures and an oversized administration that is in desperate need of deep systemic reform. These 500,000 to 600,000 people effectively serve as their guaranteed voters. Meaningful, far-reaching reforms are urgently needed.
Zelaznikov resigned just minutes before lawmakers were scheduled to vote on a no-confidence motion, making him the sixth prime minister to leave office in just 5 years. Now, that kind of turnover isn't normal political churn. It reflects a deeper, chronic instability that has followed Bulgaria since the end of the communist rule, even after joining the European Union and NATO. Now, the protests that forced Zelaznikov out were initially triggered by a proposed 2026 budget that would have raised taxes and Social Security contributions to fund higher public spending. Now, across the country, critics accuse the plan of being less about public services and more about benefiting political allies while bypassing oversight. Here's what one protester had to say.
No, the protest isn't about the budget at all. The budget was just the last straw. I believe that corruption, the way we keep on living, and the money that's actually being stolen, that's the huge problem for us.
What's notable about this movement is who showed up. You see, the protesters are unusually young for Bulgaria, earning this wave of unrest the nickname the Gen Z protests. Many participants documented their involvement online, including a get ready with me to go to a protest video like this one. That was incredible. But while the packaging of this feels new, the grievances are still old. See, what began as anger over taxes quickly broadened into a nationwide movement against corruption, weak institutions, and elite impunity. Problems, critics say, have persisted since Bulgaria emerged from Moscow's sphere of influence after the Cold War and never fully reformed its political and economic systems. Now, Bulgaria, once a loyal Soviet ally, has spent decades trying to dismantle entrenched networks tied to its communist past. Protesters argue that that process was never quite completed. They accuse successive governments of protecting oligarchic interests and allowing lingering Russian influence to survive inside politics, energy markets, and business. Tens of thousands rallied not only in Sofia, but across the country with unusually strong participation from young Bulgarians who appear increasingly unwilling to accept incremental change. Now, as he stepped down, Zelyaznikov warned that the coming months could be turbulent, especially as Bulgaria prepares to enter the Eurozone. Here's what's at stake, okay? So while the central bank says euro adoption will proceed, the political fallout is already slowing things down. The budget is now stalled, and it's unclear when new elections will be called or whether a caretaker government will be appointed. Protest leaders insist that the resignation is only the first step and that the sustained pressure is needed to finally break with Bulgaria's post-Soviet political legacy. Let's break this story down, starting with the market impact. So, from a market perspective, this kind of instability raises some red flags. Frequent government collapses increase political risk premiums, pushing investors to demand higher yields on Bulgarian sovereign debt when policy continuity becomes uncertain. Euro adoption adds another layer of sensitivity. Joining the Eurozone requires fiscal discipline and political stability, and any delays, budget slippage, or governance vacuums can rattle confidence in Bulgarian bonds, banks, and foreign investment. There's also a spillover risk here. Markets often treat Bulgaria as part of a broader Central and Eastern European risk basket. Renewed unrest can heighten caution toward neighboring countries with similar governance challenges, widening spreads and weighing on regional currencies. Now, persistent instability can also complicate relations with Brussels, slowing access to EU funds that support construction, infrastructure, and energy projects, sectors where predictability matters most. Now, at its core here, Bulgaria has a coalition math problem that never fully resolves. Its parliament is highly fragmented, making durable coalitions hard to form and easy to collapse, which is why the country has cycled through repeated elections over the past 4 years. Corruption and weak rule of law keep re-triggering mass protest cycles. Now, this latest wave may have been sparked by a budget dispute, but it quickly turned into a broader revolt against entrenched power. Transparency International currently ranks Bulgaria as the second most corrupt country in the European Union, just behind Hungary. Here's how analysts describe the current cycle. All right. The Wilson Center characterizes Bulgaria's politics as a loop of repeated elections, persistent corruption accusations, and coalition deadlock. Other researchers describe it as protest becoming politics, where public mobilization repeatedly bursts and topples political projects without producing lasting stability. Now, yes, because the ingredients driving Bulgaria's crisis exist everywhere, weak institutional trust, fiscal stress, and fragmented politics are not unique to Sofia. Recent European Parliament briefings flagged several EU countries under excessive deficit procedures, including Austria, Italy, Poland, Romania, Slovakia, and Hungary, conditions that can amplify political stress and protest vulnerability. Political risk firms already warn that Europe has become one of the weakest regions globally for government stability, with elevated risk of leadership change and policy disruption. The generational element here also matters. Major outlets are increasingly framing Bulgaria as an early example of youth-driven unrest translating into real political consequences, a narrative that could shape how future protests are interpreted all across Europe. Bulgaria is also a stress test for Euro adoption politics. See, this resignation landed right before the planned currency switch, reminding policymakers that institutional trust and price fears can quickly become political detonators. And here's the part that no one in power ever actually wants to say out loud, okay? When you burn through 6 prime ministers in 5 years, the problem isn't voter confusion or outside interference. The problem is that people don't believe you anymore. What's happening in Bulgaria looks less like chaos and more like accountability finally catching up to a political class that assumed patience was infinite. And guess what? It's not. And the Gen Z angle here matters also. When the same generation filming Get Ready With Me videos is also toppling governments, that's not a vibe shift, that is a warning label. Markets care because instability costs money, but people care because corruption costs trust. And once that's gone, no budget, no reshuffle, no press conference put it back in the bottle. This also isn't just a Bulgarian problem. The ingredients here, fragmented politics, fiscal stress, elite insulation, and a younger generation that's done waiting exist in more places than Brussels would like to admit. So no, this isn't about one prime minister stepping down. It's about what happens when citizens decide the system has had enough chances and they stop asking politely. History shows that that moment never ends quietly. All right, we're taking a quick break here at RoxomTV News. But when we're back, we got more of today's top stories, and we'll be joined by our first guest of the day to talk about them. So stay tuned. We'll be right back after this quick message.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Wish you could grab cash without selling your Bitcoin? Yeah, me too. But hey, that's why Ledden exists. They're the global leader in Bitcoin-backed loans. We're talking over $9 billion issued since 2018 with a perfect record protecting client assets. Now you might be asking, Hank, what makes a Ledden loan different? Well, you see, with custody loans, your collateral, it stays put. They don't go degen and lend it out for yield. There are no credit checks. It funds in under 6 hours, no monthly payments. You can repay anytime with 0 penalties. And for transparency that, grown-ups actually want, proof of reserves reports every 6 months verified by a top accounting firm. The bottom line is that Ledden lets Bitcoin holders unlock liquidity without selling. And you can check them out at ledden.io/RoxomTV. That's LEDN.io/RoxomTV. All right, gang, welcome back to RoxomTV News as we are recapping today's top stories. And joining us for these next couple to talk shop, we have Avi Mash, who's back with us, which means we're about to zoom out, question the system, and probably make at least a few central bankers uncomfortable. Avi, great to have you back on the show. How have you been, my friend? I've heard you've been in Miami up to some pretty cool interviews. Tell us about it real quick.
Eric Trump. So that one we posted, I think,
Oh.
a couple of weeks ago. But yeah, pretty interesting, pretty humble. It's great. I mean, it was fascinating. So I can dive into that a little bit if you'd like.
Yeah, very cool. Couple leaders in the space. Just give me 1 minute. What were the big takeaways you had from Eric and Adam? What did you hear? Is Bitcoin going to $1 million? We've heard Eric talk a lot about it.
We did ask him that, and honestly, the media portrays the Trump family in a certain way. He was very nice, and that's all I could say is when I met him, he was incredibly generous with his time. I read his book ahead of the time, just to make sure I knew exactly what they were building, and asked him a little bit about that. But the Trump family is very funny. We were in we were in the Ritz-Carlton, right? It's a nice hotel, and he was like going through each of the different light bulbs and saying like, hey, this one, I would change that, I would change this. And I was like, he's really like his father's son. So that was interesting. With Asher Ganote and Hut 8, we talked about their partnership with American Bitcoin, and then with Adam Back, the OG, some say he's Satoshi.
Oh, yeah.
But it was just an incredible experience to dive deep and, ask him about the 4-year cycles, being an OG, now starting his own treasury company, right? And so just a fascinating, we just posted that one on 21 Rates HQ on Twitter. So if you guys want to check that out, we did that about an hour ago, right before the show.
Oh, dang. All right. So you guys have really been on the move today.
Breaking news,
make sure you guys, if you haven't already checked. Yeah, check out the Bitcoin Economy podcast, one of the best ones out there. You guys do a great job. So we're super excited, though, to have you on our show today and talk some of today's top news. So you ready to rock?
Let's do it.
All right, let's go over this first story quick, because in Washington, the Federal Reserve made its move and markets around the world immediately reacted. The Fed recently capped interest rates at 3.75%, which was widely expected. Now, what surprised investors was how divided the decision actually was. 2 Fed members dissented, and Chair Jerome Powell delivered a cautious message focused on inflation risks and labor market weakness. Stocks liked what they heard, liquidity liked what it heard. Bitcoin traders, however, did not rush to celebrate. Bitcoin options markets currently imply about a 70% chance that Bitcoin stays under $100,000 through the end of January. That is not a mood, that is traders putting money behind skepticism. Now, 1 month ago, betting on a $100,000 breakout was expensive. Now, that same bet costs far less, signaling a sharp drop in conviction. The Fed also announced it will begin purchasing short-term government bonds again, reversing years of balance sheet reduction. More liquidity usually fuels risk assets, but Bitcoin has not followed stocks higher in lockstep. Gold has outperformed, equities have rallied, but Bitcoin has largely waited. Large holders appear unconvinced that easier money alone guarantees a breakout. They see stubborn inflation, slowing growth, and rising government debt. Ironically, those are conditions Bitcoin was built to address. Markets, though, care about timing more than philosophy. For viewers at home, this matters because Bitcoin is behaving less like a speculative trade and more like an asset waiting for stress, not celebration. When traditional markets wobble, Bitcoin tends to remember its role. For now, patience is winning. Bringing Avi back. Avi, the Fed cut rates. They started buying bonds again. Stocks rallied, and yet Bitcoin just is kind of sitting there. From your perspective, why doesn't Bitcoin always move when liquidity comes back into the system? What do you think?
Yeah, well, first of all, stocks rallied for a moment, and then Oracle came out and kind of crashed some of the market there. But yeah, in general, I mean, I think Bitcoin is kind of the canary in the coal mine, both directions. And you kind of see, of course, when the liquidity pumps in the system, you'd think that obviously growth stocks start to go. And you've seen some of that happen, actually. But in terms of timing, it is interesting right now. You see all this positive news, and people are sitting there asking themselves, like, why is Bitcoin not at 500,000, right? You got obviously the ETFs that came in. You got all the treasury companies buying. But the biggest news this past week or so, I think it was about a week or two ago, Vanguard. So as of December 2nd, Vanguard actually moved off of their long-term ban of crypto ETFs, and they have, I think, $11 trillion, right? Bank of America is going to allow their advisors to start to go in. PNC, the second biggest bank in France, I think it is, just allowed them to do that as well. And so you start to question, like, what's going on? Why? And the reality is, what I think, again, this is my personal opinion, is a lot of the whales finally have a chance for liquidity without crashing the market, because you have all this money coming into ETFs, you have all these buyers coming in, let's say you have 100,000 Bitcoin early on, now's your opportunity to get a little bit of cash, off the table and hold on. But yeah, I mean, I think why, going back to your initial question of why, it's quite interesting. Anyone that tells you the price of Bitcoin is going to be X, Y, Z at any time, they're lying to you. I mean, there's certain people that can obviously look at the markets, you look at different charts, and you can start to see some of the in and out flows. But the reality is, it is very tough to time the market. And so I saw some stat, and a lot of people probably know the stat, but it's like 95% of the market gains are done in like 5 days or something. Don't quote me on that because the numbers are slightly off, but it's pretty close to that. So, it's always about time in the market versus timing the market. And then in terms of Bitcoin in January, it could be interesting. I mean, I personally think we're going to see, come February, things start to heat up a little bit. Just the big, beautiful bill is going to take effect. There's going to be money flowing in. Right. It's also Trump's America right now. If you're familiar with it, thus far, it hasn't been the Trump market that we knew from the first term, but at any moment, it's just a different market with Donald Trump and president, because one tweet changes the direction, billions of dollars any direction. So you can't trade it almost like a normal market. I've actually taken a step back from day trading, or I do a little bit here and there, but more or less for when it comes to Bitcoin. I run a Bitcoin podcast. I run 21 Rates, which is a Bitcoin website. So inherently, I'm bullish long term, and it's one of those things where I feel like I know the answer key. And I already have the answer. Right. Everything that happens in between is just noise and manipulation, in my opinion.
Yeah, no, I mean, we have a lot of favorable tailwinds right now, but the price isn't necessarily reflecting what we're seeing, at least vibes-wise. But again, maybe that shouldn't be a surprise, because Bitcoin always kind of tends to do the opposite of what you would expect. I mean, right now, for instance, options markets are basically saying there's a strong chance that Bitcoin stays under 100K through January, despite, the calls for 150 by the end of the year, 200, et cetera, even with this easier money currently in play. So my question for you, Avi, is do you see that as disbelief in Bitcoin itself, or is that just disbelief in the timing of this cycle? Because this era here of Bitcoin seems fundamentally different than some of the cycles we've seen in the past.
Yeah, well, and going back to the interview I just had with Adam Back, we were talking about the 4-year cycles, and so I still think some people obviously believe in that, and it's kind of, you look at the charts from the inception of Bitcoin until now, and you can kind of see every 4 years, the halving happens. There's a cycle that goes along with it. It's you'll always kick yourself saying this time is different, so you don't want to ever go ahead and say that. Right. But it does, in my opinion, feel very different when you have ETFs, you have all these institutions coming in, you have governments buying it as well. To me, it's wild that it's not much higher right now. But again, going back to those whales selling off and whatnot, but really, it all comes down to the monetary, injection of cash. And as long as America and the world is printing money, I think Bitcoin's going to be fine long term. And in terms of the options, like what you're talking about, you can see different walls from calls and puts, and see where all the money is, where people say, hey, if it breaks X price, it's going to drop to, X price. That's kind of like the different walls of buyers and sellers that people can see. So a lot of your listeners probably know that, and that's pretty basic information. But ultimately, I think you follow the money. There's going to be a large injection of cash. I just got a check from the state of New York. I didn't realize that was coming. That was the first stimmy I saw. I think they gave it to every New Yorker. And then I know Trump was talking about doing some stimmies as well. So we'll see where that goes.
We will see. Yeah, the stimmy, I don't know. Those numbers aren't really adding up for me, but we'll see how that plays out. So it remains.
No one wants to turn down cash, but I agree.
Right. And as a Bitcoiner, pump that liquidity in the system. We're all here for it. Remember how 2020 happened? Everyone right to their Robinhood apps and started degenning out on Bitcoin, Ethereum, and Tesla. So I'm here for it. But a big part about this, I think, is confusing to everybody right now, is that we're seeing gold outperform right now, specifically Bitcoin, even though both are kind of supposed to benefit from inflation, debt, and monetary stress. But we've also seen Bitcoin kind of seems to lag behind gold by 4 to 6 months. So my question for you, Avi, is what do you think gold is signaling right now that Bitcoin hasn't quite caught up to yet? What's going on there?
Yeah, I mean, I'm certainly wouldn't consider myself a gold expert in any way, but it is, one of the longest assets in history, right? And so there's an education piece. But Bitcoin is only still like 15, 16 years old, right? And so the education piece, we live in this bubble, and I'm very aware of it when I go talk to my friends that are not Bitcoiners. Who still, I had a friend who I think I mentioned last time thought Bitcoin was dead at zero. And this was during the peak at like 100,000, right? And so you go outside this little bubble and still there's a lot of education that needs to take place. It does seem like a fairy tale sometimes when you're talking to your friends, you're like, there's this guy Satoshi Nakamoto. There's things that sound, but then when you get into why Bitcoin exists, talk about inflation, you start to show housing prices, the cup of coffee price from several years ago till now. I put a tweet out the other day that was showing housing prices by 2055. The average price is going to be like $2 million. And so you start to see, and it sounds like shocking numbers, but like everything is going up in price, and salaries are not, and so. That's where you're starting to see, Miami flipped, to a more socialist leader. New York now recently as well. And so we're living in these wild times, to say the least. And I think going back to your question around like gold, I think gold has been around for so many years. There's not as much education that needs to go into it. But it is a big canary in the coal mine that people don't trust, the monetary systems right now, and they're going back to the basics. And Bitcoin is kind of a basic, but a future basic, right? Where you still need to educate a lot of people on the value. But if I go talk with someone, it's like you can't go bring a 2,000 pound, 2,000 kilos of gold overnight and ship it to someone, right? With Bitcoin, you can send it over nations, and it's just there's so many different reasons why Bitcoin is valuable. So maybe not the best answer, but I think it's an education piece, and it's slowly starting to pick up.
Yeah, no, I think you're totally right. Even though it's been around for 15, 16 years, there's still a huge audience out there that is waiting for the proof of concept, even though people like you and I are pretty much very convinced at this point, like it's already proved what it's supposed to do. But I mean, you even have gold bugs like Peter Schiff, who have recently been like kind of turned a corner, which is really surprising because he was always on his gold soapbox. But even he recently came out and kind of changed his tune. So you're seeing those naysayers kind of turn the corner, but it's something that's only going to come with time. And I've read that you've said before, Avi, that Bitcoin isn't a momentum trade, it's a stress response. So what kind of stress do you think actually flips the switch for the next leg higher? Is it inflation? Is it debt? Is it loss to trust? Maybe something more political? What's the next match we're looking for the next catalyst for Bitcoin's next big move? What do you think?
Yeah, I mean, I think institutions are here, but I think, a lot of them are still waiting for the Clarity Act. I think once, for example, like Strategy, they're trying to get credits, ratings. So once they have that credit rating, that is massive. In my opinion, that's one of the biggest catalysts, and not necessarily just for Strategy, but just in general, to give a credit rating for Bitcoin. That then makes it pristine collateral. Right, where people are putting up homes, they're putting up different different assets right now. Now, if you can put up Bitcoin as collateral on a massive scale, that's going to really change the game. And so, Clarity Act should help with that. And then I think, it's going to be interesting. I think just more and more countries, as they start to come into it, you start to see all these prediction markets start to drag people in. Right, so I think prediction markets, treasury companies. I'm trying to think of like what brings over the next million users. And it's some of these, when I talk to my friends that are stock guys, but not Bitcoiners, they've bought in some treasury companies, and then they start asking more questions about Bitcoin themselves. And so some of these things, just take time. The other thing in the 4-year cycles, I just want to say too, is like, if you look at this chart, so it was like a 90% drawdown, then the next 4-year cycle was 80%, then it was 70%. So that's tightening, right? And starting to follow a little bit of gold. And so I think 50 years from now, you're going to see it a lot more stair step, a lot less up and downs, but consistently kind of moving up. It's just math, right? There's 21 million of them ever. Satoshi's got 1 million of them. There's many of them lost. So there's really closer to like 19 million in circulation. And so eventually people are going to continue to buy them all up, and the price, and it just goes back to supply and demand at the end of the day.
Yeah, absolutely. I mean, you can't argue with the math of this. That is certainly for sure. But we are in this new era where a lot of companies are trying to figure out, like, how do we integrate this into our financial systems, especially legacy institutions. And we're getting there. We're seeing the roots kind of take hold in other parts of the economics of our world. And that is something that we're seeing right now. And I want to get to our next story here because that builds on that. Because while lawmakers in Washington are trying to finalize how crypto should be regulated, a major labor group has decided now is the moment to jump into the fight. You see, America's largest teachers union has made its position clear. They are not comfortable with where this legislation is currently headed. The American Federation of Teachers recently sent a letter to leaders on the U.S. Senate Banking Committee opposing the proposed crypto market structure bill. Their core concern is retirement security. The union argues the legislation could indirectly expose pensions and retirement funds to crypto-related risk without offering protections equivalent to traditional investments. In their view, the bill treats crypto assets as a stable and mainstream when they believe they are neither. Supporters of the legislation push back and say this is about regulatory clarity, not forcing pensions or 401k plans to hold digital assets. Now, the text of the bill does not explicitly require retirement plans to invest in crypto, but labor groups worry that once assets are normalized in regulation, exposure follows through precedent and pressure. This debate is unfolding alongside a separate effort by President Donald Trump to loosen restrictions on alternative assets in retirement accounts. At the same time, major financial institutions are cautiously opening the door, allowing advisors to discuss limited crypto exposure with retirement clients. Now, for those of you watching at home, this matters because retirement money is not trading money. Most workers want safety, predictability, and consent when it comes to their future savings. But at the same time, completely blocking exposure could leave savers shut out of asset classes that institutions are already learning how to manage. The real tension here is not teachers versus crypto. It's about trust, okay? Guardrails, and who gets to decide what level of risk is acceptable in a changing financial system. Now, this fight is far from finished, and its outcome will shape how digital assets fit into long-term retirement planning, if they in fact fit at all. Bringing Avi back. Avi, the teachers union says this crypto market structure bill could put retirement savings at risk, even though the bill doesn't explicitly force pensions to buy crypto. When you hear that argument, what do you think they're really afraid of here?
Well, this one does hit close to home. My wife is actually a teacher here in New York City. And so to me, and she's slowly becoming a Bitcoiner, obviously, just hearing me talk nonstop about it. But, they think it's about safety, but this is really about like solvency. Like pension funds are kind of fucked. And excuse my French there, but if they're just sitting on all this cash and they're ultimately doomed, right? They're in these like 2% bonds, and that doesn't even beat inflation. So you're actually like leaking money every single day. And so, as I mentioned earlier, Vanguard, who is one of the oldest institutions and one of the safest, places to put your money historically, they're now coming over. Bank of America is coming over. So all the institutions are already coming over. And so these unions that are looking out to protect them, again, I think it comes down to some of the education piece about it. They view this and they see the drawdowns. They see the headlines that the media portrayed Bitcoin at for several years, right? And what they're missing, though, is the fact that holding dollars could be the worst thing that you could possibly do. A savings account is, I call it like a leaking account. It's almost like a holes in the boat that's constantly there. So you have $10,000 there today. You're not going to be able to buy anything, in 10 years from now. So it's just this hyperinflation. We haven't felt it really yet in America, but you go talk to any friends of yours from Venezuela or any of these countries that have experienced them literally like the Weimar Republic, like burning paper. We're not there yet, but it's starting to get to this, it does feel shaky. If you're watching any of the financial news, like the amount of debt that we're facing in general is astronomical. There's really no way out. And so the only way out is to print more money, which is going to ultimately cause more inflation, right? And so they need to really not think about them as protecting them, but think about it in the other way, where Bitcoin is actually protecting them long term. And so, 1%, even if it goes to zero, is not going to kill your portfolio. I think I saw Vanguard move from like 1%. Now Bank of America is saying like 1 to 4% even. So you see the not flagpoles. What am I saying? The goalposts start to shift. Every single month, You're starting to see more and more people fall to the sword of Bitcoin here, if you will.
Yeah, it kind of surprises me too, because a pension fund is a long-term thing. And if you look at the history of Bitcoin long-term, it always does great. Anybody who's bought and held for over 4 years never loses money, and it's quite the opposite of that. But nonetheless, there is a lot of concern here about normalizing crypto inside of retirement accounts. So from your Bitcoin-only perspective, Avi, is that fear totally misplaced, or is it understandable given how most people think about risk and volatility today?
Yeah, I mean, I think anytime you're dealing with someone's money, everyone's going to be scared and hesitant. Like my mom, for example, she's in a bunch of like water ETFs, and it's slow and steady. And I think it matters. You can't like give advice blankly to an entire audience of thousands and thousands of people, because there may be a 15-year-old listening to this, and then there's a 70-year-old listening to this, and the 15-year-old, I would tell them to go in high growth, and you have time. Whereas if you're 70 years old, maybe go buy, not necessarily bonds, but you could go buy, if we're talking Bitcoin, like go buy STRK or one of, one of the preferred stocks over at Strategy, right? They're yielding versus a money market account of like 6 or 7%. They're now giving like 10%, right? And so it's just a mental shift. And once you see it, you can't unsee it. So as Bitcoiners, come over, and that's a big piece of what you're doing. What I'm doing is to help normalize it, help educate people that what I found in life in general is anytime you talk to someone and they don't understand what you're talking about, it's very easy for them to just push you away and to dismiss it, and they don't want to talk about it because they don't feel educated enough to talk about it. But when you really break it down, it's just math again. There's 21 million, call it 19 million for real. And over time, it's just going to have to go up because there's supply and demand, and it's the most pristine collateral right now. And people have these fears of quantum coming in, but Bitcoin's still a small fish. Again, we live in this bubble where we think it's the end all be all for everything, but compared to real estate, compared to even gold right now, compared to all the money that's in the world, quantum's going to go after the banks if they have a choice, right? If it gets in the wrong hands. Right. So, I think the flight to safety really is Bitcoin ultimately, and there are some drawdowns. But to your point, like especially if in a retirement fund, I put a lot of my money into to iBit and to Bitcoin itself, just because I know I feel very confident 20, 30 years from now, I'll be in a very good place. So short term, things will move up and down, but long term, like you said, it's, every 4 years you look at the price, the floor is higher and higher and higher. So.
Yeah, I mean, as you mentioned, this just comes down to education, and then once you dip your toe in that orange pool and you give it a little bit of time, you're like, oh, this makes a lot of sense, and we're slowly but surely seeing that. We saw that with individuals for so long. We're seeing institutions get into play with it. So, we got a lot of room to run, I think is what I'm saying here. And going back to this bill, supporters of the bill say that this is about regulatory clarity and not exposure, but there are plenty of critics out there that worry that once something is regulated, it's slowly gets pushed into portfolios anyway. Do you think that concern is valid right now? Yeah, I mean, I think that what you said is true. I think over time, like they want to do what's best for their clients. A lot of them, are fiduciary, and so they have to do what's best for their client. And so, over time, Bitcoin just keeps winning and winning, and it's the best performing asset, I think, of all time, basically. Maybe Monster Energy drinks, which is unknown to a lot of people, or Nvidia. But reality is there's no better asset class right now, and so you're doing a disservice to your customers if you're not getting them at least some allocation. And again, 1% allocation if Bitcoin goes to zero, which I think is basically impossible at this point. I won't say never, but with all the institutional money that's in here, that risk no longer is in place in many people's eyes. And so worst case scenario, it did go to zero. You're still only lost 1% of your portfolio. And the reality is it's not going to go to zero. Over time, it's just continuing to grow. More and more people are going to start to understand it, and it will be, pretty ubiquitous, I think, if not in the next 5 years, the next 10 years, everyone will know what Bitcoin is. And there's I think it's I've heard different numbers, but like $100 trillion coming over in the next 20 years from the previous generation. And so
Bitcoiners tend to be a little on the younger side, and where are they going to want to put their money? If you want to exist as a financial advisor, which is already starting to slowly go away, like I use Gemini or I use ChatGPT to deep dive myself into stuff. And so if they want to still control the money, and you're talking to a young person that just now works with that financial advisor, they're going to go switch advisors to someone that will allow them to. But with the pension funds, obviously you can't switch as easily, but I think it is something that, again, if they keep it to 1%, 2%, the fears should be minimal.
Yeah, and you make a great point. You know, we're about to experience arguably the greatest wealth transfer in the history of mankind, and we'll have this younger generation that's always known about Bitcoin, and it's a lot less of a step for them to make to invest in Bitcoin because it's always been around. They're not competing with this narrative of gold the same way of, you know, thousands of years. And what matters to the younger generation is a lot different than what matters to the old one. They want immediacy. They want to be able to transfer large sums of money very quickly, and Bitcoin allows them to do that. But, you know, an issue that I think a lot of people are still having, and it's been a bit of a narrative this year given the institutional adoption we're seeing, is that with these big institutions quietly opening the door to Bitcoin exposure for retirement accounts, it does kind of beg the question, right? Is that a sign of maturity in Bitcoin as an asset class? Or does it actually risk turning Bitcoin into just another financial product instead of the escape valve that it was kind of intended to be? Do you think there's any chance of it being like co-opted by big financial institutions where it could turn into something that it wasn't initially intended to be? Avi, I think we lost your mic there really quick. Are you on mute, buddy?
There we go. Yeah, I might have. Sorry, my mic fell. Can you guys hear me now?
Oh, you're good. Yeah, you're great.
Cool.
Thank you.
I'll hold it up here. But yeah, no, my question, that is the $1 million question I was saying. And the reality is ultimately that, am I still on, by the way?
You're good. Yep.
Yes. Okay. I was saying the reality is anyone can buy Bitcoin. So you can't stop institutions from buying it. They are going to do what they're going to do. And to the second part of what you're asking, could it be co-opted? Like, I think some of that is happening now. You can start to see it, but it gives it validity. It gives it staying power, right? And I think it ultimately, like, now's the time to get as much Bitcoin as possible because the institutions are coming for it for sure. It's going to be what I think is the biggest credit, usage, a credit instrument for a lot of these massive institutions that are moving billions of dollars, trillions of dollars. It's the gift and the curse. You talk to OGs and they're like, no, this was meant for us. This is completely to avoid it. So there is some fears there, but the reality is, like, there's nothing stopping them from buying it. So, I like to be pragmatic in my approach of, like, yeah, I could live in this fairy tale world where, we all live on an island, we can use Bitcoin for everything, but that's just not the reality. So, I like to live in the real world and see what's really happening, and then, use that vision to say, okay, how can I personally, for my family, benefit from this? Are there instruments like treasury companies, which have, not right now are not great because they're down 80-90%. But long term, did those start to come back? Is there different instruments that you can use to gain additional yield on your Bitcoin? Yeah, I'm blanking on the initial question. I went down this rabbit hole, but yeah.
You're good. I mean, I feel like it was always gonna have to be this way for Bitcoin to become what so many of us think that it will. If it's really as valuable as we think it is, of course, big institutions were going to make their way into this asset class eventually. And that's what we're seeing right now, which is, for me, like, that's all the proof in the pudding. The second BlackRock started acquiring Bitcoin, I was like, okay, we're officially on the right path here. And also, too, if people keep buying it, it gets more expensive, which makes it harder for anybody to become such a large holder. Like, even Strategy has, I think, like 3 to 3.5%. And aside from BlackRock, I think they have the most as any publicly traded company. I know that. So that was always going to be part of it, and that's why it rewards the first movers in the space. As Mark Cuban always says, no balls, no babies. And if you had the foresight and you were looking at the signs on the wall and you bought in early, you're going to reap those rewards later on. But it doesn't come without the trials and tribulations of Bitcoin's volatility in the early years, as we've seen. So, It was always going to happen that way, I think, for better or worse. And those who adopted it early are going to reap those benefits. All right, Avi, we're going to take a quick break.
One thing real quick,
back,
I think.
We're going to come. Please. Yeah.
I was just going to say, too, like, America's like starting to shift where you can now pay your taxes in it. Like, where we're really going to start to see the transformation and where this is amongst everyone is today you can't go buy things necessarily with Bitcoin. That, at least from the masses perspective, but that's going to slowly change with technology, right? We just talked with Zero Hash. We just talked with a number of these infrastructure platforms where it's going to be like Venmo. You're not going to realize that you're paying with Bitcoin. It's going to just be a click of the button. And that's where we're really going to start to see this transformation, where it is starting to use in Bitcoin's original use case. So I'll let you hit your commercial 100%. Now, though.
No, you're totally right. And I've been saying this for a long time. This is a UX thing. Once we're able to get the user experience to be seamless like Apple Pay, the floodgates really open because we live in a world of convenience right now. Once it's really convenient, there's nothing stopping this train. So it's very exciting times for Bitcoiners like you and I, Avi. But we're going to take a quick break here, gang. When we're back, we're going to be rejoined with Avi to discuss why you may be spending more during this holiday shopping season and what that's going to mean for you and your wallet. So stay tuned. More RoxomTV news coming your way after this quick break. Now, while Washington argues about regulation, risk, and who should be protected from what, the consequences of policy decisions are already showing up somewhere far less abstract. They're showing up in stores across the United States, from small towns to big box retailers. If your holiday shopping feels heavier this year, that feeling is well earned. Prices on everyday goods have climbed sharply, and tariffs are a major reason why. Clothing, electronics, groceries, and basic household items are all more expensive than they were last holiday season. Economists point out that roughly 90% of clothing sold in the United States is imported, along with a large share of electronics. Now, when tariffs increase on those imports, retailers pass the added costs directly to consumers. According to research groups, holiday prices are up roughly 26% year over year. That increase adds about $130 to the average Christmas shopping bill. Now, some shoppers are frustrated by the higher prices, others are resigned to them. And many are still buying anyway because holidays do not pause for economic debates. Supporters of tariffs argue they protect domestic industries and reduce reliance on foreign manufacturing. Critics argue that tariffs act as hidden tax that disproportionately impacts lower and middle income households. Both arguments exist at the very same time. And for those of you watching at home, this matters because policy decisions do not stay in Washington. They show up at checkout counters and on credit card statements. Higher prices change spending habits, delay purchases, and quietly strain household budgets. This season, the most valuable shopping strategy is not brand loyalty, it is flexibility, comparison shopping, and restraint, because tariffs do not come with holiday discounts. We're bringing Avi back. Avi, people don't need a CPI report to know that prices are heating up this holiday season. They're feeling it at the checkout line. When you see tariffs driving prices higher like this, what does that tell you about how policy decisions actually land on regular households? Because it's a tighter squeeze this year for a lot of people out there.
Completely dismiss that as a business owner myself, or and talking with folks. But the real story is kind of what I've been talking about this whole time with this currency debasement, right? You look at the price of homes versus the price of what a Bitcoin was back in the day, or even like an iPhone. I took up some stats here real quick, but in 2011, an iPhone cost 162 Bitcoin. 2015, 2.75 Bitcoin. 2021, 0.019. Today, iPhone 17 is 0.0072 Bitcoin, right? So it's really the inverse of inflation, where Bitcoin kind of provides this deflationary element there. But tariffs, it's kind of like the news cycle. It's very easy to go ahead and blame that, but we should really be blaming the Fed and the earlier decisions where it was like, I think it was 30% of all dollars had been printed in the past 5 years or so. And a lot of that obviously was for COVID. I'm not an advocate for that. I didn't think we needed to print so much money during that time. It kind of was in this chaos and the media was allowing people to let them continue to print. But We're feeling it now. The dollar's lost like 21% of its purchasing power, since 2020. It's very clear. You don't need to be a genius. I don't think I'm some sort of math wizard by any means, but it's pretty basic, and the writing's on the wall that your dollar doesn't go as far anymore. I think over the past 10, 15 years, it's dropped like 90%, right? And so it's like you can't keep printing. And I don't know if Trump, the big beautiful bill is spending even more money, so it's like you can't win. And so like being bipartisan here, it's the reality is they keep printing money. There will be a new Fed chair coming in shortly if it's Hassett. That's another positive for Bitcoin because they'll be printing more money, and so it's just one of these things where, and I don't know, I'm not an economic, major here to have the answer necessarily of how to get around this, but it's certainly not printing more money, and no one wants to have that short-term pain. I think as a politician, right, your ultimate goal is to win that next, election, and you're not going to do it by not printing more money and not giving people, these giveaways, but people want that short-term pleasure, which ultimately creates this long-term pain. And you're seeing like America lose its power right before our eyes. And I'm an American and proud patriot, but it is tough to see like the demise slowly happen here. Specifically in the U.S., but throughout the world. I mean, everyone's printing.
Yeah, I will disagree with you, though. You can win right now. And as we both know, that's by buying Bitcoin. Because like you said, the writing is on the walls. We have a very pro-crypto president right now who is not only pro it from a legislative side, we're seeing all of his family members get into it to increase their own personal wealth. So I don't think they're doing that because he's giving them the wrong information right now, right? Like the writing is very clear here. And, we're all in this right now, and if anybody's even kind of paying attention, we all see where this is headed. So that's why we're so glad to have people like you on here that are spreading the word out there, because this is important for all of us, not just those who are currently involved. And before we let you go today, Avi, really quick, you mentioned earlier in the show, you had some really interesting talks with Adam Back and Eric Trump. Where can our audience go online to check those out? Because those sound kind of like can't miss episodes. Those are straight from the horse's mouth. So where can they go to check those out?
We're on Twitter and X, so it's a little confusing, but we have another brand, 21 Rates. So I'll get into that in just a second. But our Twitter handle is at 21, the number 21 Rates HQ. So you guys can follow us on Twitter, and then 21rates.com. Right after this, actually, at 12:30, if you guys don't have another show, I don't want to steal your audience, but we are at 12:30 going to be doing a giveaway. So we figured, like, there's so many podcasts. How do we differentiate ourselves? So we do this trivia now with Bitcoin News. We've collaborated with them at 12:30. We got Adrian Morris coming on from True North. He's awesome.
He's great.
Knows MSTR and treasuries and AI like no other. And so we go through the biggest news of the week, and at the end we do a little trivia. And so we're going to be giving away money there, or Bitcoin, which is even better than fiat, of course. And then on 21rates.com, we're going to start to do little quizzes and things like that to ultimately give people money, educate them, help them to start to pick up, even if it's small amounts of Bitcoin. We want to do that the right way and make sure that folks are getting educated in the market. And there's no better way to get orange pill someone than to give them some Bitcoin and say, okay, now what do I do with this, right? And so that started my journey, initially. And so we want to do the same. And 21 Rates is very much like a nerd wallet, essentially, for all Bitcoin financial products. So you have your dashboard, you can save your favorite products, check out different wallets, yield platforms, treasury companies, lending. We partner with Ledin as well, so we got to give a shout out to Ledin. But yeah. Oh yeah. Come check us out. We're on YouTube, Twitter, you name it. We even got a TikTok, but I think we've only put up a video or so. But Twitter or YouTube, I can't wait to see your website.
TikTok Bitcoin dances.
Yeah, I'm going to start dancing.
Awesome, we love it. Whatever gets the clicks, my man. I get it.
Yeah.
Also,
well, congrats to you guys too.
You
guys just raised. You guys just did a big raise too. So congrats to Roxom. You guys are really killing it, and you guys are doing such a great job. So it's fun to watch you guys continue to kill it.
Oh, we appreciate that. They've really assembled a great team here, and it's been a collective effort all the way around. So, and we're just trying to be part of this bigger ecosystem that you and so many others are a part of, spreading the good word to the masses. Because like you said, you just got to get a little bit into people's pockets. They set it and forget it. They check it a year later, they're up like 100%, and then they all start really doing their own deep dive into it. And that's how we, propagate this adoption cycle that we're seeing. So, and also too, gang, if you haven't already, also make sure to check out Avi's Bitcoin Economy podcast. It's one of the best ones ones out there. Definitely worth a listen. And Avi, it's always great to have you here on the show, and we appreciate you joining us today and sharing your insight and expertise. And we can't wait to have you back real soon, my friend.
Thank you, man. Have a good weekend, and thanks for everyone for listening. Appreciate it.
Yeah. Have a great weekend too, and enjoy your holiday season. We'll see you soon, buddy. Thank you.
Yeah.
All right, we're going to be right back after this quick break with Trump's warning of a World War III and how Reddit is responding to Australia's social media ban. And we'll be joined by the man that connects the dots like no one else, Nolan Bowerly, to break it all down. Stay tuned. More Roxom TV news coming your way after this. Welcome back to Roxom TV News. Now, in the first hour of today's show, we led with breaking developments off the coast of Venezuela, where the United States has crossed a major line by physically seizing a Venezuelan oil tanker in international waters and is now preparing to intercept even more. The move targets a so-called shadow fleet moving sanctioned oil, largely to China, and has already frozen nearly 6 million barrels of crude, sending a chill through global shipping and energy markets. Washington says that these sanctions enforcements Washington says this is sanctions enforcements with teeth. Caracas calls it piracy, and legal experts say it's aggressive but lawful, signaling a shift from symbolic sanctions to physical enforcement that could ripple into gas prices, shipping costs, and broader energy volatility. We also spent some time in Eastern Europe, where Bulgaria's prime minister resigned after weeks of unusually young, Gen Z-driven protests that began over a controversial budget and quickly widened into a full-blown anti-corruption revolt. Now, the resignation marks the sixth Bulgarian government to fall in 5 years, highlighting chronic instability, weak institutions, and lingering post-Soviet influence, just as the country is preparing to enter the Eurozone. Markets are watching closely because political chaos raises risk premiums, complicates euro adoption, and serves as a warning sign for other fragile European Union governments facing similar mixes of fiscal stress, corruption concerns, and public distrust. And back to Washington, D.C., with the fallout stretching across Kiev, Moscow, and every NATO capital in between, the temperature around the Ukraine war is rising again. President Donald Trump told reporters he directly warned countries involved in the conflict that the continued escalation risks triggering World War III. Let's take a look at the video.
I have a great relationship with the countries of Europe. As you know, I took GDP. I took what they're spending as a percentage of GDP, but it was at 2 and they weren't paying, and now it's at 5, and everybody's amazed. But that 5% is, a lot of it's coming back to the United States. With that being said, I'd like to see the killing stop. 25,000 people died last month, soldiers, mostly soldiers, but some people also where bombs were dropped. But for the most part, 25,000 soldiers died last month. I would love to see it stop. And we're working very hard. It doesn't really affect the United States unless it got out of control. You know, a thing like that, as you probably know, because you are a professional, a real professional, which is something I don't say about a lot of other people, but you are a great professional. Things like this end up in third world wars. And I told that the other day. I said, you know, everybody keeps playing games like this. You'll end up in a third world war, and we don't want to see that happen.
Now, as you just saw, Trump described the situation as leaders playing games and warned that history tends to end those games badly. The message was not aimed at one single actor. It was aimed at the entire system surrounding the war. Ukraine continues to push for stronger guarantees and more support as it fights for its survival. Russia continues pressing for leverage and territorial control under the banner of security. NATO continues walking the narrow line between deterrence and direct confrontation. Now, supporters of Trump's warnings argue that this is what leadership looks like. You say the quiet part out loud before miscalculation turns into catastrophe into policy. Critics argue that public warnings can harden positions and complicate behind-the-scenes diplomacy. Both views exist, and neither erases the underlying risk. Now, when a U.S. president openly invokes World War III, markets, militaries, and allies hear it as a signal that margins for error are shrinking. The future danger remains the same one analysts have flagged for years: a proxy war drifting into direct conflict through accidents, escalation, or political pressure no one can unwind. For people watching at home, this matters because global conflict never stays abstract. It feeds into energy prices, inflation, defense spending, and economic uncertainty that eventually lands in everyday life. And joining us to talk about this story and others this morning is the man that can connect all the dots, our own Nolan Bowerly. Nolan, thanks so much for joining us. How are you on this happy Friday morning?
Enthusiastic about the future of humanity. It looks like World War III or the Golden Age, So I'm tending on the Golden Age side of what's going on.
Teetering on the epic collapse of civilization or the Golden Age. I can live with that for now. So, Nolan, when a U.S. president comes out and says this could spiral into World War III, do markets and other governments actually hear that as a serious warning, or do they mostly see that as a political messaging?
Well, in this case, he's echoing what European leaders themselves were saying yesterday. You had the leader of NATO saying there's likely going to be boots on the ground. You saw the meeting between the various prime ministers and presidents in Europe the other day, all of them saying we might reach these levels of war. So I think that's what Trump was referring to when he said games, the kind of threats that were coming out, particularly some of the European side. And then Trump sort of, I think, really doing his best to cool down tensions, because the thing I liked about the way Trump handled it this week is that he really did shake the box. You had the American plan, and then that had the various contingencies about land, and then the European plan came out and said, no, we're not going to do it that way. But Trump, typically, when you see that, it becomes this negotiation and no one's going to move and everyone's back in the same positions they were weeks ago. He shook the box and suddenly he said, well, why not we just have elections in Ukraine? And that might actually be the answer. We might not be able to get anywhere until we have some degree of reference to the Ukrainian people themselves, because it looks like they're the biggest stakeholders in these decisions.
Mm-hmm. Yeah, he's never going to forgive Zelensky for not saying thank you enough, is he? He wants him out of there. So, we've kind of been in this weird... What's that?
It goes right back to 2020, of course, and 2019. Don't forget it. There's the perfect phone call, right? Trump was impeached because his relationship with Zelensky in 2020, in January 2020. So it goes back much further. So there's all the Burisma questions, Hunter Biden... Remember, they haven't had elections since that time when Zelensky was first president in 2019, and Trump was president at the time, and they did have a relationship, and that was the exact call that the Vindemans intercepted.
Mm-hmm. Well, Trump's never been one to harbor a grudge. We've been in this weird in-between phase now for a long time. Like, Ukraine is asking for more support. Russia is pushing its advantage. NATO is trying to deter without stepping in directly. So, Nolan, in your mind, what's the bigger risk here? Someone deliberately escalating, or everyone kind of slowly stumbling into something worse by accident? I could see this going either way, but what are your thoughts on this?
Well, I think Trump already positioned himself to not be under the gun in the way that he monetized the war for American benefit. And that's a disturbing way to put it, but it looks like that's how he configured his game board from the minute he became president. So Europeans effectively are just paying Americans in order to continue to litigate the war in Ukraine. And so with all the corruption discussions that are there, I think what you're seeing from Trump is just he doesn't want to get, because it's already arranged smoothly for him, he doesn't want this train to keep running the way it is. He's de-risked himself personally and America for the most part, but if things continue in the static way they have, nothing really changing, everyone normalizing what he said, 25,000 deaths a month, you do risk, and especially playing games in order to run to a line of peace and then run back from the line of peace, as we've seen numerous times, right? It looks like we're close and then everyone backs up. So put all that together, and I think you have a scenario here where you got to start shaking the box in ways that could increase the odds of peace. I don't know if you can solve things the way they are now. That's the type of thing that tends to linger. So seeing the way he's got it configured now, and especially retargeting the actual voice of the Ukrainian people and starting to try to draw that out through mandate and election. Maybe Zelensky wins, and then that's what the people want, and maybe that is the way it continues. But at least you'll have one side of the equation reinvigorated, because right now everyone just keeps repeating themselves.
Yeah, and the world is watching for a lot of reasons on this right now, aside from hoping we end the destruction and the deaths we're seeing over there. Of course, this impacts the global markets, and investors have mostly learned to live with this war kind of playing on as background noise now for years. But what do you think actually snaps them out of that? Like, what's the kind of headline or event that makes markets suddenly say, okay, this just changed in a meaningful way?
Well, we've been seeing that so far today, for example, with the European banks more or less putting an end to the ability of the European Union to start playing around with the Russian reserves. That would have been something that would have progressed the whole situation one level further, because the Russian money's been frozen. What actually gets done with that money does have a lot to say about what the intentions are in the future, about how everyone's going to get along. It's almost like telegraphing how you expect everything to go, or even what is possible in your reality. So treating Russia's reserves at this point means that there's never going to be peace. Forget it. I think that's what the sort of message it sent. Whereas if you do keep the reserves there, you still keep the diplomatic channel and the potential of the end of the story being, okay, we resolved our problems, the sanction of the money is over, here you go, you get it back. So there's a difference sort of belief in what futures are possible by either of those routes that they could take. So that's, things like that matter. And, another one would be how global markets, if you look at what some rumors were suggesting, that Germany, France, and England would start dumping American treasuries to retaliate on the economic side for America not helping. Very difficult to get confirmations on that. You've seen plenty of rumors all around, and that's just the market sort of trying to metabolize this kind of anxiety and stress. But that would be a huge indication. And you saw other rumors out there that China would take up the slack. If something like that happened, it really would tell a story of different alliances. But I guess you're seeing the lines right now. Things have changed. On the same note, you have Italy yesterday saying that they're going to, continuing along this line, continue to bring their own gold reserves home in order to keep them away from the European Union, just in case something happens. So that's already an indication that a big member state is not so happy with the European arrangement financially, and probably because of policy alignment.
Well put, well put. All right, we're moving on to our next story, Nolan, because as pressure builds over Ukraine, the broader shape of America's relationship with Euro is also currently being tested. Now, this next story begins in Washington and lands hard in Brussels, Rome, Budapest, Warsaw, and Vienna. See, a leaked document reportedly tied to a longer draft of a U.S. national security strategy claims the United States wants to encourage 4 countries to move away from the European Union. Now, those countries are Austria, Italy, Hungary, and Poland. The alleged strategy would push closer ties with these governments while weakening Brussels' influence, framing the EU as a bloated, restrictive, and hostile to national sovereignty. Now, the leak surfaced days after a public strategy document warned that some European allies may no longer be reliable partners. European reaction was immediate and heated. EU leaders argued the United States has no role in shaping Europe's internal political choices, and some officials called it an attack on the post-Cold War order. Others urged Europe to become more independent from Washington on security and defense. Meanwhile, nationalist leaders sympathetic to Trump praised the idea, seeing it as a validation of their own critiques of the European Union. Now, the White House has denied the existence of any alternative or classified strategy, calling the leaked fiction and distancing itself from the reporting. So the future question is whether this is a real blueprint or an internal debate that escaped, or geopolitical noise designed to apply pressure. Either way, it highlights growing strain between Washington and Europe at a moment when unity is already fragile. And for viewers at home, this matters because fractured alliances affect trade, security coordination, currency stability, and global markets in ways that move slowly, then suddenly. Bringing Nolan back. Nolan, when you see a leak claiming the U.S. wants countries like Italy, Hungary, Poland, and Austria to drift away from the EU, what's your gut reaction to this? Is this serious strategy, internal debate leaking out, or pressure being applied indirectly, or maybe something else? What are your thoughts on this?
No, we're certainly entered an adversarial environment right now between the EU and the United States. Now, I know England's UK digital censorship thing is not technically, of course, part of the European Union, but it's within a trend of aesthetic of censorship, let's say. So when you look at what England did and the American companies that were targeted, the blueprint is right there in Europe for a very similar formula. They've wanted for a long time plain text sent to Belgium, and we're supposed to send the plain text to Belgium encrypted. And then part B of the plan is if we don't send the plain text to Belgium, what are you going to do about it? And that's where Europe continues itself. What are you going to do about it? In many ways, Europe just doesn't have the cards and the negotiating ability in order to ask for these things. And in many ways, I would understand that a lot of American companies and Americans often feel like Europe is, not really an ally at this point. A lot of people would say there's more legal risk to going to England than Russia. Now, I don't think that's exactly true, but people do say it online. People say a lot of stuff online, but people say that. And so we're at this point where everyone's reconsidering these relationships and that, let's not forget America's oldest and most ancient enemy is from Europe. The original enemy of America was the King of England. So America does have, and there was even a lot of thought back in World War I whether or not America was a revolutionary power or an imperial power. And in World War I, America sided with England, but there was a whole part of the world that said, oh, wait a minute, I thought you were going to be this revolutionary power. And weirdly, the part of the map that he underlines in this sort of breakaway from Europe is actually the old Habsburg Empire, the Austro-Hungarian Empire that was actually opposite America that many people assumed they would join back in World War I to move against the British imperial power. So weirdly, the exact country he suggests are the belligerents in World War I with whom America did not side. So take that for what you will.
Awfully convenient. It makes me wonder if this was leaked in a peak Hedge signal chat again, but who knows? That remains to be seen at this juncture. But if Washington were even thinking along these lines, Nolan, what do you think the underlying frustration is here? How the EU makes decisions, where it's headed politically, or how reliable it's been as a partner? Well, what's your beat on this?
Yeah, well, I don't know about reliability as a partner. I think that the EU has had a different bet on what the future looks like, and they bet on that future being multilateral, and they bet on that future not being dominated by energy power players. There's a lot of people who believe that Putin and others have influenced European politics by getting them so subordinated to energy producers by making them think that they could get to their energy solution with wind and all these other unreliable sources. They ended up spending a fortune on Europe because now we really are moving to a world where energy matters. How much energy you have is so important for your economy, and Europe is just lagging and they just don't have the cards to be able to negotiate. So I think a lot of this has to do with America just seeing more benefits from aligning with places like the Middle East. Simultaneous to Trump talking about this, there's lots of people saying he's trying to create this new, I think he called it C5, and the C5 would be China, Russia, India, and these are huge, massive amount of population, a massive amount of energy consumption, a massive amount of energy production. All of them coordinating for some new kind of order. There was another one Trump suggested, which would have involved a lot of the Anglosphere outside of England, so Australia, Canada, South Korea, Japan. So not Anglosphere, but of that kind of economy. So it looks like America's almost talking about two simultaneous new multilateral structures of power that they can influence without the burden of Europe getting in the middle of every conversation. So this stuff looks fundamental to power relationships in the world. So the C5 in particular is kind of like BRICS plus America. So that's a game over if that happens.
Yeah. Yeah. And, even if this situation never actually came, or if it ever actually, if this never actually came to fruition, this situation, if it never actually did, the idea alone has caused a pretty strong reaction in Europe. So from a market's point of view, how much damage can uncertainty like this do all by itself?
Well, Europe is kind of a fixed income economy. They don't have the kind of retail participation in markets that America does, or the Middle East does, or Asia does. So you're dealing with an economy that I don't think has, there's a few large family offices, there's a few large wealthy folks, but I don't think they themselves, for the most part, according to rumors, I don't have the data in front of me, but the general perception I have online is they've already tried to skedaddle out of Europe for tax purposes and residency purposes a long time ago. So you can barely even count them as part of the negotiating bloc. It really is the European states themselves. And the more you look at Trump's, he didn't just realign these relationships that he offered, he also realigned American military interests last week to focus hemispherically. In that same document, they talk about hemispheric control for America, more or less the Monroe Doctrine. And so you take those two things together and you start to realize that America is more or less just de-risking from the mistakes that Europe made, and is also implementing a weaponized, through the Genius Act, a weaponized stablecoin system. Now, before in the Bretton Woods system, the US dollar being the reserve currency was kind of negotiated with a few counterparties, which were the other central banks of different foreign states. So you could sort of bulk buy US Treasury at once. And now, with the decentralization of the stablecoin and that distribution, what you're going to end up having is individuals can start buying US dollars to the stablecoin issuers, who are allowed to issue these US dollars as long as they buy US treasuries. And it's further weaponized that Americans can't receive interest on deposits in stablecoins, but foreigners can. So you can get a situation where Canada or France or Germany can hold US dollars and get paid up to 10% interest, subsidized by the American consumer, in order to weaponize the dollar, which will have much better benefit for them in the long run. So this is a very hostile arrangement of the US dollar, and it's in vain with those rumors. That's why that's why everyone's talking about rumors on these levels. And you saw things like Macron and Keir Starmer and the German fella talking about dumping US treasuries, or at least rumors about it, because we're at that level now. We're at the level of, pillars of the foundations of our economy that we thought were there and were persistent from World War II, suddenly changing.
Yeah, really quick, we got about a minute left on this story, Nolan. For viewers at home, specifically here in America, who don't follow European Union politics closely, why does European unity even matter at all? And when big alliances start to wobble, what is usually the thing that breaks first?
Well, in this case, European Union unity was a commercial arrangement they were attempting after World War II to avoid war. So the point of it was to avoid war. It was purposely created to tie up economic integration between the states so that they wouldn't fight each other. And it looks like that might not work. They're starting to fight each other because the whole federated financial system doesn't really respond to every individual state's needs. It began with the Greece-Germany fight after the 2008 financial crisis, and it hasn't really stopped. And now you can really start to see the fault lines in the European states about which states get some benefit from the European Union arrangement and which don't.
Makes a lot of sense. Thanks for breaking that down for us, Nolan. We're going to move on to our next story here, because while governments debate power and alliances, another fight is unfolding in Australia over speech privacy and who controls online spaces. You see, Reddit has recently filed a lawsuit in Australia's High Court seeking to overturn the country's nationwide ban on social media access for users under 16. Australia's law is the first of its kind, requiring platforms to block underage users or face massive fines, while children and parents face no penalties. Reddit argues the ban interferes with free political communication implied by Australia's constitution. It also claims it should be exempt because it does not meet the legal definition of social media platform under the law. Now, Australian officials say they are protecting children, not corporate profits, and have compared big tech's legal pushback to tobacco companies fighting health regulations. That comparison has landed loudly and intentionally at the center of the debate is enforcement. Now, platforms are using age estimation tools, behavioral interference, and selfie-based verification, raising privacy concerns for everyone, not only minors. The broader question is whether protecting kids requires turning the internet into a permanent identity checkpoint. If Reddit succeeds, other platforms are expected to follow with similar legal challenges. That would turn Australia's world-first ban into a global test case. For those of you watching at home, this matters because policies like this rarely stay local. If courts uphold the law, other governments may adopt it, reshaping how access, privacy, and speech are balanced online worldwide. Bringing Nolan back. Nolan, this law is technically about Australia, but Reddit is acting like this case could shape the internet everywhere. Why are tech companies treating this as such a big deal? Is this the beginning of a potentially slippery slope?
Well, a slippery slope I wouldn't apply it to that way. Either things start or stop. There's no logic to, sometimes trends continue, sometimes they don't. This is the start of a trend, though. And I think there's sort of widespread agreement that there's a problem with young people using social media the way it is and the mental illness and the types of addictions it can cause for young people. So it looks like there is sort of widespread understanding that the drug, and it's a drug, right? It's a dopamine delivery system. And if you're constantly jacked into a dopamine delivery system and you're addicted, right? The interface of TikTok is pure addiction, and it's designed to be addictive, and it obviously is addictive. So I think a lot of people understand that, but again, we're going to come against the weakness of a government top-down solution. I saw a young Zoomer or Gen Z or whatever they call them, and he was supposed to be a controlled interview with the Prime Minister of Australia. And the young fella, the high school kid who the ban would apply to him, says, look, we all know how to get around this. Like, you're ridiculous if you think this is going to work. Yeah. And all you're doing is training everyone to find these different ways around. And once you have an appetite to get around, you get around. And so that kind of went viral. And I think that is a big part of it. And unfortunately, this is one of those instances where it looks like personal responsibility and parenthood and being good parents really might be the only way through, because it doesn't look like you're ever going to be able to get a technical solution to this. It looks like the age-old job of mother and father might be the only answer here, because I don't know anyone who doesn't want to control and fix this for kids. You can't, it's not, to me, it goes outside of the realm of censorship. Now, what Reddit is doing, I get why they're framing it in legal terms, because the legal system won't understand it unless they approach it this way. And, in principle, I see that what they're saying, and they're probably right. But I think on a spiritual direction, most parents say, wait a minute, my kids aren't getting social media accounts at a young age, and all these things do have ramifications. And so we'll see, but it looks like the test will be for governments to be able to do this. I anticipate it's going to be a few governments that take a shot at this. Australia happens to be the first. How successful will they be? My bet is zero. I think, again, you're going to see it whiplash around. It's not dissimilar to the violence in video games question of our youth. Didn't really work out the way Tipper Gore wanted it to, I don't think. I think I cut more heads off characters in the years after the conversation got started than before. So it's a parent thing.
Yeah, it looks... The parent thing, right? One of the things I don't think we can yet just have AI do for us, and you are seeing it, all these smaller apps are emerging that people are looking to as alternatives. And, it's especially interesting in this case because Australian officials are now comparing big tech to big tobacco fighting health rules. Do you think that's a fair comparison, or is that more of a political framing to win public opinion?
Well, no, like I said, I do think it's a drug. And in the same way that any drug is another dopamine delivery system, social media is that. And TikTok, for example, is absolute crack cocaine when it comes to these things. So I don't think the framing is incorrect. I think that there is a drug and addiction aspect to this stuff. And so I mean, about big tobacco was probably a little more sinister in their hiding of the facts.
Yeah.
But in some ways, you understand why it's going in this direction. And I do want to say, look, suggesting that it's just parents are the solution absolutely leaves out the fact that there are many parents who will do nothing and kids who will suffer from it. So that doesn't seem like a great answer either. It might be the only answer to save individuals, but when you choose that, you're leaving a lot of kids behind. That's just a fact. You have to acknowledge that, right? And so what's the solution in the middle of that stuff? Again, it's one of the most complicated aspects of it. And I do think that these kids in the future, the ones who are able to save themselves, will probably agree with the framing of it being a drug or that the tobacco.
Yeah, I think you're right.
Yeah.
Yeah, those dopamine hits are very real, and you do the watch time thing. You get on your iPhone every day, and you're like, I was on this thing for 7 hours? Like, it is very addictive in just a very different way. So yeah, maybe it is a pretty apt comparison. And for those people watching at home, Nolan, why do you think they should care about a court case happening across the world? I mean, once a country successfully does this, how often do other governments follow suit with their own similar types of regulations?
Oh yeah, I see this like I said, I think you're gonna see many instances of this. I think in the United States it's gonna be a little harder. But I do imagine there will be some conditions where states, particularly around education, do it. You've seen that many times, many states at schools banning any social media or devices from the campus. I think that's where you're gonna get a lot more traction, the physical limitation of the devices and the separation of the individuals. Instead of speech laws, it'll be more like access to the hardware laws in certain areas or precincts. Probably the only way they're going to be able to experiment in America with this stuff, which makes sense. I think any other country that doesn't have the First Amendment, like the United States, is going to follow what Australia did, and VPNs are going to be a great business going forward. VPNs, we got to. VPNs, come and sponsor. We can say, if you are watching this, do the VPN thing.
Oh man, I got to start my kangaroo VPN company after this. That's a great point. They're going to be exploding down that way. It's very smart. Yeah. All right, we're going to move on to our next story here, Nolan, because as governments argue about protection and control, economic reality has a way of delivering its own verdict. And our next story comes out of the United Kingdom with implications for global markets. You see, official figures show that the UK economy unexpectedly contracted by 0.1% in October. Economists had forecast some modest growth, but instead the economy also shrank by 0.1% over the 3 months leading into October. Now, manufacturing weakness played a role, with vehicle production still recovering from a cyber attack that disrupted Jaguar Land Rover earlier in the year. Now, the rebound in car output was smaller than expected. Services, which make up most of the British economy, showed no growth over the same period. Analysts say that uncertainty ahead of the government's budget weighed in on consumer spending and business investment, and the political response has split predictably. Government officials say they are focused on long-term growth through infrastructure and energy policy. Opposition figures argue tax decisions and fiscal uncertainty have undermined confidence. The immediate implication, though, is monetary policy. Weaker growth strengthens the case for the Bank of England to cut interest rates at its next meeting. And for those of you watching at home, this matters because the UK does not operate in isolation. Economic weakness there can influence global markets, currency, corporate earnings, and investor sentiment more broadly. Now, when large economies stall, the ripple effect tends to travel far beyond their borders. Bringing Nolan back. Nolan, the UK economy shrinking when growth was expected might sound small, but it surprised a lot of people. How big of a red flag is this miss in your view?
I don't think it's big anymore, in the sense that no one's really buying forward data very much in the marketplace anymore. Or if you are, you're probably kind of out there saying, "Oh, Bitcoin's a scam." Also, the kind of the same Venn diagram people. If they're still believing some of these projections from all of the governments around the world. It's not a Trump hired a new labor guy. The things were immediately revised after. the other one that he fired in the summer. So more and more, it becomes obvious just the nature of the system we're in now. Data, all of it is fake. There literally isn't good data in the world. The only data that looks relevant and usable is what's happening on the Bitcoin blockchain. That's kind of why Bitcoin is a kind of asymmetric bet right now, in the sense that we have an entire system experiencing entropy and falling apart. And as long as there are financial incentives attached to the data, you could almost bet your bottom dollar it's fake and in every way gamed in some or manipulated. There really isn't almost any trustable data out there. So for a government to say we expected a bit of growth and then we didn't get a bit of growth, probably either or of them are off, right? It was, first of all, the projection probably was off, and then the degree to which it was off was probably off. If you take just a litmus test and you look at the feet, right, that counts better. Look at the amount of millionaires leaving England. I was just in the Middle East with a lot of people at the Bitcoin Mina event. Every second or third person you meet was from London 2 years ago, just moving here, just moved there, just coming, just going. And everyone is coming from that part of the world and relocating into the Middle East and a lot of other jurisdictions. So you can see the brain drain coming out of the UK very obviously. It's not a trickle, it's a complete torrent coming out of that island. And so taxes are too high. People are worried about this and that. There's a lot of insecurity. London is more violent than it's ever been. Nowhere near an American city, so to give it, perspective. But approaching New York City levels, to be honest, right? We're in New York City levels of violence, so that's a record in some ways for the UK. I don't think the UK had been, or London had been more violent than New York since the 1800s or something, and we're approaching that world now. So, different things have changed over there, and the brain drain is real. The human resource migration is real. The human capital migration is real. And you can see it in our industry. You can see it in many industries. And so just judging from that, I think everyone would expect this to continue. As far as data goes, though, no one's taking it seriously anymore.
Right. And, the UK obviously is a big global player, has been for a long time. And we often hear that it doesn't exist in a vacuum economically. What are the real ways weaknesses there show up in other markets? Like, what should people be paying attention to, if at all, and how that could affect their lives, like even here or outside of the UK?
It'll be the energy policy for sure, right? They're suffering because they put up the wind turbines and they spent all their money on making sure they didn't have coal power plants anymore, even though they have a ton of coal, even though there's tons of ways to do clean coal and to make it efficient and not so bad for the environment. So they opted for Greta's feelings, and Greta's feelings were probably not the right way to design your economic policies, because energy is everything, and it's not just witches and rainbow dreams. There's a reality to that. You ask the average UK person, and their electricity bills are through the roof. They're breaking all-time records at the exact moment where the grid is becoming less stable. So imagine they've lost stability in the grid, and they've added a huge amount of cost. Compare that to places that have made the right choice on energy and electricity, like the Middle East, where everyone's moving to, and all you see is just run it hotter, let's go more. The United States would be another example of that. So it has everything to do with making the right choices about energy. And so anyone who made similar choices to them, and notably France did not, right? France chose to continue its nuclear reactors. France chose to build systems that were a lot more resilient. France is enjoying a tremendous advantage right now in terms of quality of life, cost of living with electricity. Germany being another example where they went the UK way and they actually imploded their nuclear reactors and celebrated. They thought it was hilarious. And it's not working out. And so they're having a lot of trouble. Meanwhile, Trump has banned windmills. They're banned. You can't even build them. They're illegal in America now. And I think a lot of people celebrate that. Windmills are illegal now to build new ones. Yeah. Oh, yeah.
Oh, to building new ones. That's wild.
Yeah. You can keep
wild to me. And it. Go ahead.
You can keep the ones you have. You just can't build new ones. There's a ban.
Yeah, I love that drive to Vegas. They have all the windmill, or no, it's to Palm Springs. They have all the windmills on the way. They're very charming, but I guess they're not allowed anymore. But in this new era we're in, energy is becoming the most important thing, which is no surprise why Bitcoin is so important, because it's the only currency that is created literally using energy. And we're going to be back with Nolan in just a second to talk about our top Bitcoin story today. So everyone at home, stay tuned. We'll be right back after this quick break.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Are you interested in effortlessly growing your Bitcoin portfolio? I sure am. And the Bitcoin credit card by Gemini earns you Bitcoin back on every purchase. You can use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. All that with no annual fee. And right now, you can grab a $200 Bitcoin welcome bonus. It's the easiest way to start building your Bitcoin stack. Just go to Gemini.com to learn more. All right, we're back here at RoxomTV News with our Bitcoin story of the day. Bitcoin, the price this morning is currently right around that 90K level. And earlier in the show, we dug into our story of the day and breaking down the Federal Reserve's decision to cap interest rates at 3.75%, restart short-term bond purchases, and strike a noticeably cautious tone around inflation and the labor market. Stocks responded the way they usually do when money gets easier, but Bitcoin didn't chase the rally, with options markets still pricing a strong chance Bitcoin stays under 100K into January as traders pull back on near-term breakout bets. The takeaway was that despite easier monetary conditions and rising debt pressures, large holders appear unconvinced that liquidity alone is enough, with Bitcoin behaving less like a momentum trade and more like a pressure valve, waiting for real stress in the system before it makes its next move. We're bringing Nolan back. Nolan, the Fed cuts rates and starts buying bonds again. Stocks jump, but Bitcoin barely moves. In simple terms, what does that tell us about how investors are treating Bitcoin right now?
Well, I think when these end of the year, there's a lot of anxiety about what's going to happen next year. When the government makes a change like this, or when the central bank makes a change like this, and it's largely expected, most of this was telegraphed in advance. There was a lot of rumors and leaks. The market had already more or less adjusted. So more and more people aren't paying attention, though, to the Federal Reserve. The bigger questions will surround when Trump fully takes control of it, because it looks like this is the last gasps out of the Jerome Powell configuration of the Federal Reserve Board. I think you'll see different movements when it becomes obvious that Trump has seized control and subordinated the Federal Reserve to Scott Bessent and the Treasury. And that will involve, of course, whether or not the new Fed chair is the rumored fellow from Coinbase, or whether or not the auto pen appointments of the other Federal Reserve board members will be rescinded, as Trump is saying they're without effect because they came from the auto pen of Joe Biden. So Trump is continuing his campaign of getting full control over the Federal Reserve. So that's the larger story, not the smaller tweaks at the end of the year like this from the Jerome Powell board. I think he only has one or two more of these instances before his time is up anyway. So I anticipate everyone is waiting for the real new mandate to begin, and this won't be done by Jerome Powell in one of his last addresses. Even though, agreed, structure is changing, I think everyone's waiting for the big shift.
Yeah. So is it right now? Because usually we expect if there's, when we hear there's easier money, we would expect it to help Bitcoin. But right now, it doesn't seem to be the case, but we got stocks flying off the charts, gold is at all-time highs. So is that what's going on right now? Or does it seem like investors are waiting for Powell's successor before the market or the Bitcoin market kind of reacts in the way that we would expect right now?
I'd say people around the Bitcoin story, Bitcoin exists on these narratives, right? And the narrative will be the full subordination of the Federal Reserve. That's not this story. We're waiting for the big story to be told, not Jerome Powell's last tweaks. I think a lot of Bitcoiners just don't attach themselves to that narrative. It doesn't really, even though you can see there's some tangential things that could be fed into the Bitcoin narrative. Maybe a few years ago, it would have been enough for Bitcoin people to cook and start getting out there and getting the market to move. But right now, I think Bitcoiners are waiting for bond market capitulation and things like that. Not so much, we've got a little more ammo and a little more dexterity from the Federal Reserve level. I think that it's just a complete, and I think a lot of Bitcoiners are suggesting, and have been betting for a long time, that along with this sort of regime change of the Federal Reserve, the very concept of easy money will leave, right? The very idea of whether they print more, it's just going to create inflation. So I think a lot of Bitcoiners will see that as a move towards Bitcoin, that the efficiency of money printing and liquidity is going to go down because of the inflation aspects. So I think Bitcoiners don't feel like this is the seismic shift and timing that they've been waiting for. I think when you hear Larry Fink and all those kinds of people describe this exact same scenario, they're talking about the big changes and the sovereign risk. Right now, we're seeing it as, okay, we just need a few tweaks and we'll be fine. Watch out for this, watch out for that. But that is typical of someone like Jerome Powell at the end of his mandate.
Yeah, and at this same time, we're a little disappointed that Bitcoin isn't following the stocks after this Fed rate cut. But gold is doing better than Bitcoin right now. Do you feel like that's a sign people are still playing defense instead of looking for big upside, or we're just still waiting for that next catalyst before people feel like they can buy back in at the prices we're currently at?
Well, for the amount of manipulation that Bitcoin has experienced market-wise over the past few months, you've seen it from the likes of BlackRock and from the likes of Vanguard. So, it's gold has experienced the same kind of manipulation for years. So I'd say their world is probably a little more adept to these manipulations and the theater around them, whereas Bitcoiners are experiencing this at this level kind of for the first time. So I think it's a bit of a difference between dealing with Wall Street at this scale and how Bitcoiners interact with it versus how gold traders, who probably have been through this rodeo a little more. So I think that's the difference. And in this, the way the cards are being dealt right now, like I said, Bitcoiners are waiting for the real change, not Jerome Powell's policy tweaks. So I think it is that gold guys have been dealing with this. They've understood the market manipulation around their market, just like the silver folks have understood it for a long time. And they probably have a better sense for it. I think a lot of people in Bitcoin have been surprised, right? Everyone was surprised when you got all these huge announcements, JP Morgan, everybody, and then it's flat. Well, guess what?
Yeah.
There's a lot going on, and it's not all right. The data on Bitcoin is what cannot be manipulated. The price of Bitcoin can be manipulated and always has been, right? And by varying degrees of scale and size. We're just at a new size and scale of manipulator The good news for Bitcoiners is every single person and every single entity and every single level of that scale that tries to manipulate Bitcoin gets burned. And so,
Right.
that could be what we have in store this time too.
Yeah, it's a complex geopolitical and economic web that's being woven, and no one does a better job of you than breaking it down. And I know your show is coming up next. So really quick, before we wrap things up here on Roxom TV News today, what's going on with you and your show? What can our audience expect today? What will you guys be talking about?
Oh, it's great. So I've got Kyle Kemper visiting us. Kyle has broken the story this week on the Canadian digital ID coming out. So they have a new, more or less what we saw in the Vax passports. So this will be a government issued smart data tool, but of course we know where this goes. So we're going to take a look at that. He's gone under the hood even and gone into procurement. He's gone into how it was built. He's discovered it was a fork of a European digital ID system. So he's pretty well versed on all the details. So he's going to share those with us. He's the one who uncovered the story this week, and it went kind of viral for that.
Cool.
Yeah, pretty neat. And so we're going to be talking about that. We're going to be talking about the trade tensions over in Canada. Hold on, let me get my actual notes up here before I
got the big board.
Looking at last week's notes, but we've got some pretty good stuff here. I just have them all in order. So we're going to be covering a little bit of the EU digital partnership with Canada vis-a-vis the United States.
Okay.
So much like what you and I were discussing earlier, those parties that will be part of these coalitions or not. So that'll be one of them. We're going to be talking about a little change in configuration in the Canadian, we call it the House of Parliament, but it would be the same as Congress. So there was a floor crossing. So it would be like a Republican turning into a Democrat. And so that happened yesterday. So everyone in Canada is a bit of an uproar about it. But I've got some context that'll help everyone chill out and not be so nervous about it all.
And yeah. And I'm sure at some point you'll be touching on Katy Perry and Justin Trudeau going social media official. Is there now
I'm not going to.
It's big news.
So the guest is actually Justin Trudeau's brother, so I don't want to get too much into his family life. We're gonna take it away from too many of the family stories. Okay, we're gonna be Justin won't be involved. It's just the digital ID.
All right. I'll have to get the inside slant from you another time. But Nolan, it's always such a treat having you on the show. Thank you so much for joining us today, and have a great weekend. And everybody, make sure you stay tuned for Nolan's show. He does it like no one else can. And we are wrapping up things here at Roxom TV News for another week. Thank you all for watching. Like, follow, subscribe if you haven't already. And we will see you all next week before we get a little break for the holiday season. So thank you for tuning in. Like, follow, subscribe, Roxom TV News, and me at Hank at Roxom TV. And we will see you all Monday for more world news and crypto and market madness. So thanks for tuning in. See you all on Monday.